Thank you so much for clicking on this video. If you are watching this right now, you basically know exactly what has happened to the price of Bitcoin over the past week. I know, it's no joke. I'm not trying to be funny here. I'm sure a lot of you are just disappointed with Bitcoin right now and are wondering if you should be selling your Bitcoins to take a loss because it probably seems like Bitcoin is never going to recover ever again. Well, let's try to figure it out together, shall we? What's going on, guys? Welcome back to the channel. You are watching Modest Millennial, where we talk about all things money that they don't talk about in school. So if you are new here, please consider subscribing and gently tapping the like button to show that you like the idea of making money, saving money, and investing money. It's been a roller coaster of a week for not just Bitcoin but also all other cryptocurrencies out there that lost roughly $1.3 trillion in a matter of just a couple days and causing a lot of bullish crypto enthusiasts to reconsider their choices of investing almost all of the money they have in cryptocurrencies. Bitcoin briefly dropped below $30,000 for the first time in 2021. Just Bitcoin by itself dropped by about $400 billion in its market value, leading to unprecedented frenzy in the market. Bitcoin being such a volatile asset, its rising and coming back down is not a new phenomenon. Earlier this year, Bitcoin started sliding first from its all-time high after Tesla announced that they will stop accepting Bitcoin as a form of payment. This decision was driven by the extensive use of unsustainable and unclean energy generated from coal to mine Bitcoins. After this drop started, there was no going back up for Bitcoin until one day when El Salvador announced that the country will start accepting Bitcoin as a legal tender and will use Bitcoin as a form of currency besides the US dollar. This news was celebrated in the crypto community as a major event for Bitcoin, followed by rising the price of the asset overnight by a few $1,000s. But of course, success for Bitcoin doesn't always last forever, and there is always an anti-hero in Bitcoin's story of advancement to one day be worth more than $100,000. And this time, that anti-hero was China. Earlier this week, China started advancing its efforts to crack down on cryptocurrency mining in its territory. About 65% of the world's Bitcoin hashing comes out of China. This Bitcoin mining comes from massive mining farms located in the major regions of Xinjiang, Mongolia, Sichuan, and Yunnan. And the major reason for China to dominate Bitcoin mining is due to its cheap electricity costs. Cryptocurrency mining is a high energy consuming process, and with electricity in China being relatively cheap, it keeps miners in China at peak efficiency and provides for more profit with each successful mine transaction. Earlier this week, China started shuttering down Bitcoin mining operations in the country, and Bitcoin's hash rate fell through the floor. Moreover, China also urged its banks and financial institutions to crack down on crypto trading. The thing that is interesting here is that this is not the first time that China has tried to ban mining or using Bitcoin in the country. According to this article that keeps track of China's history of Bitcoin bans, 2013 was the first year when the crackdown began in China against Bitcoin. This caused the price of Bitcoin to drop by about 50% back in December 2013. This was followed by another major crackdown in China in 2017, reasoning Bitcoin's extensive use in illegal activities such as money laundering, and the price of Bitcoin crashed from $4,200 to $3,100 overnight. But within just 3 months of that crackdown, Bitcoin went back up to its all-time high back then, which was $19,000. This crackdown was followed by a warning to miners in the year 2019, stating Bitcoin's potential to pollute the environment due to its high use of electricity generated from coal. But this time around, the crackdown did not affect Bitcoin's price significantly. Finally, this brings us now in 2021, when China is again ramping up its efforts to get rid of mining and transacting with Bitcoin in China, and is putting downward pressure on the already beat up price of Bitcoin. But we are not done yet. External factors such as government policies, industry standards, and general market sentiment are always causing volatility in any asset's value, and Bitcoin is not one to be left out by this trend. But another fundamental factor that is causing more downward pressure on Bitcoin's price at the moment is what is known as the death cross. No, this does not mean that anyone is dying and that you should stop crossing the intersections altogether. Jeez. A death cross is a fundamental chart pattern in a stock, bond, or any asset which occurs when the 50-day moving average line crosses below the 200-day moving average line and indicates a bearish or a downward trend for the price of the asset. This sign or indicator indicates a potential major sell-off in the underlying asset. It usually appears when a security is trending downward in the short term and takes a bearish or sell-off trend from being short term to lasting several days or sometimes even months. If there was one example I could give you for the death cross, it would be the most recent 2020 stock market crash that happened when the pandemic was first announced. Look at how the S&P 500 index crashed right alongside the 50-day moving average, crossing below the 200-day moving average. So death cross is a good indicator of prices falling down in the short term and should be paid attention to. At the same time, it is just an indicator and does not guarantee that the prices will crash down, but chances are that they probably will. So, where do we go from here? According to this article on CNBC, a whole lot of mining operations could be headed to Texas. Like we discussed earlier, Bitcoin mining is an energy intensive operation, and Texas offers some of the world's lowest energy prices, and the state's share of renewable energy is growing fast, with now 20% of its power generation coming from wind energy. This relatively cheap renewable energy, coupled with state policies that are very pro cryptocurrency, makes Texas a dream destination for future crypto mining setups. According to the same article, Kazakhstan could be another potential and likely destination for Bitcoin miners due to its abundant energy supply. Very nice. Some of these new locations require about $30 to $40 million of capital investment to set up a mining hub, and the lead times could be between 6 to 9 months from approval to having a fully functional mining operation. Meanwhile, as the price of Bitcoin and other cryptocurrencies continues to follow a downward trend, let's find out what major crypto holders and millennials are doing with their crypto investments. According to this article, about 77% of crypto investors are millennials between the ages of 25 and 40, and the share of Gen Z in cryptocurrency holdings is increasing day by day. Now, before we understand what millennials are doing with the downward trending Bitcoin prices, it is important to understand why millennials are more inclined towards cryptocurrencies and the reasons why millennials are driving the Bitcoin economy. Number one reason is due to high returns from Bitcoin or other cryptocurrency investments. Over the past 10 years, Bitcoin has consistently earned higher returns compared to the stock market, except for the year 2018 when Bitcoin was down by 72%. Also, during the same 10-year period, Bitcoin averaged an annualized return of 230%, which accounts for about 10 times the returns gained from the Nasdaq index. Of course, for millennials that are burdened with 2 times as much student loan debt as the average US household and roughly 6 times as much credit card debt, Bitcoin comes as a breath of fresh air, providing for consistently and significantly exponential results compared to the US stock market. Number two reason is that Bitcoin forms a retirement portfolio item. Because of the debt burden that we just discussed that millennials these days are facing, people around my age are a long way off from where their retirement portfolio should be. But at the same time, retirement portfolio investment offerings have barely changed over the past several years and makes it difficult to significantly increase the amount of money one is making through their retirement investments. But given the rise of digital assets and decreasing trust in traditional financial institutions, millennials these days feel more comfortable allocating even as low as 5% of their holdings to crypto investments in hopes to one day have gains from Bitcoin and other altcoins, make them significantly more money overnight and take their debt burden away. And finally, the number three reason is how close and well versed millennials are with the digital world. Millennials have been molded by the digital age and have grown up very closely to the evolution of the internet, going from dial-up internet 20 years ago that sounded like aliens attacking the planet to now seamless internet connection even on international flights and mountaintops. With this kind of evolution, millennials have become a part of the rise of fintech world where you could swipe to buy stocks or tap your card to pay for groceries or even store all your money completely in the digital world. As such, trusting a digital currency like Bitcoin comes easy for millennials and becomes a major reason why millennials are so comfortable parking their retirement dollars in digital assets. So, what are millennials doing with Bitcoin these days? According to this article on CNBC, nearly half of millionaires have at least 25% of their holdings in cryptocurrencies, and more than a third of these millionaires have at least 50% of their wealth in cryptocurrencies. Many millennials are quoted to have a positive outlook on blockchain technology and Bitcoin in general. And while socializing face-to-face has become a thing of the past, many millennials have found community and oftentimes fun in the crypto space online. This connection with the digital world, coupled with a love for memes and investing in meme investments such as AMC, GME, and Dogecoin, at the same time, trying to get rich quickly while completely distrusting the traditional forms of investment, a lot of millennial investors are more comfortable YOLOing their life savings in meme investments, trying to quickly get rich rather than following the deadbeat path of working for the rest of your life and saving money bit by bit in hopes of one day becoming a millionaire. And finally, this brings us back full circle to what I am doing with Bitcoin as a millennial. I have said in my previous videos too that I feel comfortable with having as little as 1% of my investment portfolio allocated to Bitcoin. In recent times though, that 1% allocation has lost a little shine and has fallen down to 0.5%, not because of selling any Bitcoin, but due to the decline in the price of Bitcoin itself. But I continue to buy more and more Bitcoin as money becomes available, and throwing in $100 here and there towards Bitcoin in my BlockFi account is fun to say the least. That being said, go check out my BlockFi link below to get $10 worth of free Bitcoin. And while you are at it, also don't forget to check out my Webull link in the description to get 2 free stocks all the way up to $250 in value. Thanks so much for watching, guys. Really appreciate it. And as always, please don't forget to like this video below and subscribe to my channel for more personal finance content. Also, if you are tired of just watching me in this small frame, please follow me on Instagram where I share spicy insights of my personal life and how I save money pretty much on a daily basis. Alright everyone, see you again soon. Shut it down.